Let's start with the markets, obviously. So red has been the color of choice, not my choice. Seeing things red every single day is depressing, okay? So the rhythm of the bull markets and bear markets, right? So on a bull market, the rhythm is Monday's strong, right off the bat. Tuesday strong. Wednesday's kind of a little bit of flat. Thursday, Friday, a little bit of a profit taking, but again, strong close on a Friday, and then repeat the action. And so for 2 years, we made nothing but higher highs, higher lows. That's an uptrend. Well, the uptrend has been broken now. So in many different ways, 200-day moving averages, all the things that more people follow. Uptrends are channels that we've been stuck in for a year and a half. Look, all that is gone. Now, that's the technical picture. Obviously, there's a reason for it on the macro side and the fundamental side, which you have to put together and figure out what the market's going to do going forward, because technical analysis shows you what happened in the past. It doesn't tell you anything about what's going to happen in the future. However, enough people follow it that it may affect the moves in the markets. Okay. So the market closed in correction territory. So that is the technical term, I guess. When the SPY goes down 10%, that's correction territory. 16 days, literally, last new all-time high we made 16 days ago, and since February 20th, we rolled over, and it's been fierce. So seeing red day after day, and what has happened is that, so let's go back quickly to the rhythm of a bear market. The rhythm of a bear market is strong down days on Mondays. Go look at the last 3-4 Mondays. Strong down days, extreme amounts of selling. Tuesday, we kind of bottom around 9-10 a.m. A little short covering happens. We kind of try to roll up. Thursday, flat. Friday, we start selling again. That's why I'm not liking today's rally. Because it's happening on a Friday. On bear markets, Friday rallies are not good. Although, in a bear market, the rallies you get in a bear market are a lot more fierce, a lot more rippers than bull markets are. On a bull market, we just go up, we go sideways for a couple of weeks, consolidate, and then take the next leg up. I think what we're going to experience now is, if this is the short-term bottom, we're going to rally back up to resistance and roll over, and then next leg will come on the downside. So I do expect lower lows, lower highs now for a while, as opposed to higher highs, higher lows. So the rhythm has changed, I can tell, right? And the other thing that has happened over the last 15 days in a row, every single rally has been sold into, every single time. So I do watch intraday charts as well as dailies and weeklies, obviously, because sometimes you have to take yourself back from your PC that you watch. A lot of people day trade, 0 DTs, whatever. I'm not into that. But once you take the look at the bigger picture, it's pretty evident what's going on. And that's when experience helps you. So markets down, 10% on SPY and 14% on the triple Qs or NASDAQ. But what has happened during this time is that $5 trillion worth of wealth got wiped out. That's a lot, obviously. And for long-term investors, I think DCAing works, and which I have 2 different accounts. I have a long-term investment account. I have a short-term trading account. The important thing is to understand if we have changed colors in the marketplace, which I think I have. So I think we're going to see a lot more red. Yes, there will be bounces, and these bounces will be fierce. I mean, like today, fierce bounce right off the bat, and it's staying strong. So let's see if they sell into this rally. Most likely not. Most likely it'll go through maybe a few more days, And we have very important thing coming up next Friday, which is quarterly option expiration, which is going to create more volatility. So one thing that I can truly say is last year's last episode of Power Hour, I had a prediction. The prediction was, I can't predict what the market's going to do, but one thing I predicted, and it's definitely has been true so far, is increased volatility. And we had more volatility in the last past 2.5 months. We haven't even finished March yet, the first quarter. We had more volatility than we had all 2023, 2024. So for some people, volatility is their friend. I mean, I like volatility, but even certain things these past 15 days is making me nauseous. So if this is making me uncomfortable, God knows what happens to the average retail investor. So what we need to understand is when the markets turn, there is sentiment as well. I do watch sentiment closely, very closely. And on the right-hand screen, as some of you may see, is so the sentiment has been shifted from bullish to actually almost to extreme bullish levels, but it takes time for that flip to happen. Once the flip happens, it also takes time to work through this drawdown and finally reach a bottom. A lot of damage has been done, okay? This damage, a lot of people are expecting a V bottom like we have experienced last 2 years, right? We snap down and then we just snap right back up, go make all-time highs. I don't think it's going to happen this time. All the dip buyers over the last 15 days have gotten wiped out, right? Because they're so used to buying the every 3, 4, 5% dip. Well, these dips did not hold. So hopefully some of you, most of you kept your powder dry and, because cash is a position. A lot of people say cash is trash, and this, that. No, I disagree. Cash is a position and you need to preserve your capital because there will be a buying opportunity down the road. Is it today? I don't think so, but let the market settle down. Markets open every day. You don't need to rush, into anything. And although if you do have some stocks that you've been eyeing on this pullback, I think you can comfortably maybe sell some cash secure puts. That's what I'm doing in my account. I'll share it in a minute. So, those are the things. And but the macro has changed. Technicals have definitely changed. It needs to repair itself, right? I don't think the V bottom is going to be the shape of bottom we're going to experience on this down leg. I could be wrong, but that's my opinion, and I'm going to trade accordingly. I'm going to trade what I see, and that's what I'm seeing. It is definitely treacherous, right? It's definitely exciting if you're short, especially. I mean, on my 10-minute, 10-day chart, the VWAP, it's just coming down, right? It's just slowly walking it down. For 14, 15 days in a row, every bounce to VWAP, if you bought 0 DTEs or dailies or the next day's puts, you made a ton of money. That's about to break to the upside. We'll see what kind of push we get to the upside, but 15 days is a long time, man. I don't think I've recalled seeing it 15 days in a row. Market just struggling under VWAP because the selling is so strong. So we'll see, so to finish this segment, I think this is that can't bounce. I don't think we have bottomed. Market needs a lot of work to just stabilize first, and then if the next leg comes, a retest of the lows needs to happen. Maybe lower lows on non-confirming technicals. Some bullish divergences need to develop because we did create massive bearish divergences while we were making all-time high after all-time high. None of the technicals were confirming, especially on the weekly side. RSI was not confirming, MACD was not confirming, and they all have turned down now. So it takes time. It's going to take some time. So patience is the key. Please follow 3 Ps: patience, position size, and planning. That's the only way you can survive these types of markets. Keep your powder dry, keep some cash on the side, and live for another day, because there's no reason to actively get pushed and pulled with every word President Trump is saying. It's affecting the markets. Every time he opens his mouth, market sells off. And it started a while ago with the tariff situation. So we'll see. We'll see where we go.